If you've ever looked at your city's property tax assessment and thought, well, this is what my home must be worth, I hate to break it to you, but those numbers are usually pretty far off. If you're buying or selling in this market, relying on the city's tax assessment is one of the quickest ways to end up mispricing a property. So in this video, I'm going to be breaking down the difference between the city's assessed value and the market value, what both actually mean, how the city calculates their assessed value, and how a realtor's comparative market analysis will typically tell you a different story. So the assessed value is the value that the City of Calgary assigns to your property for the purpose of collecting annual property taxes. That's really it. It's not designed to reflect what your home would actually sell for on the open market. The city uses a mass appraisal system. That means that they look at groups of similar properties and then apply a broad data model, not individualized evaluations. They consider things like your property's size, location, and sales data from previous years, but they're not actually going into any homes. They're also not factoring in things like any renovations, wear and tear, or the condition of the property. Also, their valuation is based on data from nearly a year prior, so it's almost always out of sync with what's happening in the current market. Market value represents what a buyer is actually willing to pay for your property in the current market conditions. It's influenced by things like supply and demand, interest rates, local competition, but above all, the specific characteristics of your property. This is the number that actually matters when it comes to buying and selling a property. It's not theoretical and it's not based on models. It's grounded in real-time data from what buyers are actively doing right now. So if you're looking at selling or just want to know how much your property is worth, the market value is the number that you need to know. Don't worry about the city's tax assessment. So assuming that the tax assessed value is an accurate value of your home is what people tend to get tripped up on. The assessed value can be much lower or much higher than what your home is actually worth in the current market. What a home ends up selling for is all dependent on the current market conditions, buyer demand, and any upgrades to the property, along with multiple other factors. The biggest issue is that assessed values are frozen at a particular point in time, usually reflecting the market data from the previous year, so by the time you're looking at it, it's already outdated. It's a blunt tool. It's just there to help the city understand how much to tax you. It's not a pricing tool. When realtors price a home, we're not looking at some automated formula or mass data set. We're looking at properties that have recently sold that are directly comparable to yours. So things like the same neighborhood, layout, condition, and size, and this is what realtors call comps or comparables. We also factor in what's currently on the market, how long these properties have been sitting, whether they're getting price reductions, or how hot and cold the local market is at the time. If your house has a fully developed basement, backs onto green space, or just had a brand new kitchen reno, those things matter and can dramatically affect what a buyer is willing to pay for it. This is why a proper CMA, or comparative market analysis, is such an important part of the selling process. It's a hands-on informed approach and frankly much more accurate than anything you would find on a tax document. If you're selling your home and you've based the price on the city's tax assessment, you could end up either overpricing and scaring off buyers or underpricing and leaving money on the table. On the other side, if you're buying and looking at the city's tax assessments, you might think that you're getting a deal or overpaying just because the assessed value is higher or lower than the list price. But again, that number doesn't accurately reflect what homes are actually selling for. In Calgary, where neighborhoods can shift in popularity quickly and values often change due to inventory or other factors, understanding the true market value is key to making smart decisions. So whether you're buying or selling or just keeping an eye on your home's equity, always base your strategy on the current market value of your home and never the tax assessment. So the next time you get that property assessment letter in the mail, take it with a grain of salt. It's just a tax calculation and has nothing to do with the actual value of your home. If you're ever curious about the actual value of your home, feel free to reach out. I'd be happy to prepare a CMA for you so you can understand your property's actual value. So thanks so much for watching. I hope you found it valuable, and I'll see you in the next one.